Welcome back to Alpha Recap, your after-hours digest of the market's biggest moves. We've got a spicy one for you today. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Friday's late session was wild. A handful of speculative names ripped, and volume blew those moves into headline territory.
Yeah, so what really stands out here is how concentrated the action was. Not broad market momentum, but big spikes in a few small and micro caps that reshuffled position values for anyone holding them.
Totally. We saw three names in particular take off. One that traded at a double-digit price, and two penny situations where the percentage moves were, frankly, eye-popping.
Let's hit the headlines. And the number that really caught our eye? Skills jumped about 239% to $12.46 on roughly 27 million shares. Big move.
Right, and EUDAW shot up about 212% to 7 cents on roughly 3.4 million shares. Classic penny stock behavior. Then BURU climbed about 36% to 38 cents on roughly 355 million shares. Massive share turnover.
Honestly, I was a bit surprised by the BURU volume. 355 million shares is huge for a sub-dollar name. That kind of turnover can create one-way markets pretty fast.
Yeah, that tracks. When you see that much volume in a microcap, you have to think about coordinated flows, options pinning, or even short squeezes driving the tape.
Okay, let's break this into themes so people can digest it. First up, momentum and retail flows.
All three moves screamed momentum. High volume spikes and big percent jumps generally point to retail interest and momentum traders piling in, not a sudden change in fundamental value.
Right. And the other thing is, momentum can go two ways: quick continuation or brutal mean reversion. In plain English, these rallies can keep running, or they can give back most of the gains just as fast.
Exactly. For skills, the higher price and heavier volume makes it a bit more accessible to bigger traders and algos. For EUDAW and BURU, the penny profile means much higher execution risk.
Which leads us neatly into liquidity and execution risk. High volume doesn't automatically mean tidy trading.
For penny names, bid-ask spreads are often wide, limit order books are shallow, and slippage can be painful. So even if a trade looks liquid on headline volume, getting in or out at a sensible price can be tricky.
So traders with big size might think twice. Skills sits in the middle. Double-digit price, tens of millions of shares traded. More institutional access, but still vulnerable to intraday whipsaw.
Short and sweet. Liquidity alone is not stability. If flows are one-directional, like a crowdsourced bid, the price can flip fast when that flow dries up.
Let's talk valuation sensitivity, because the briefs actually gave scenario inputs for each name. Little nuggets that tell you how fragile models get in these environments.
For skills, they offered scenario points around 27%, about 12.5%, and roughly 1%. Those spread out outcomes show how much model outputs swing when you tweak assumptions.
EUDAW had an even wider range, around 45%, about 26%, and an outlier near 308%. When your base price is tiny, those percentages look dramatic, and they are.
BURU's scenario points were roughly 99%, about 90%, and roughly 2%. That kind of asymmetry means your fair value estimate could be anywhere depending on the input.
I mean, when you step back and look at this, the practical takeaway is sensitivity testing and strict position sizing become more important than usual.
Agreed. Small changes in assumptions produce huge valuation shifts for penny and microcap names. That's why risk management was front and center in these briefs.
Speaking of risk, Friday's moves happened right before a long weekend. That timing compresses risk and makes things more complicated.
Yep. With markets closed over the weekend, filings, press releases, or social posts can land while the market is out. And that can produce big opening gaps on Monday, April 27th.
So traders who rely on intraday liquidity could face nasty slippage at the open. And risk teams might tighten margins or limits after seeing these spikes.
Short reaction.
Noted.
Short reaction too.
All right, back to the specifics. Rapid-fire stock updates so listeners have the core facts to take away. Skills first.
SKLZ, up about 239% to $12.46. Volume around 27 million shares. Signal, very high momentum and meaningful headline liquidity. Watch follow-through volume and any filings tied to the move, and that 1246 level will be a reference for support and resistance.
EUDAW next, up about 212% to 7 cents on roughly 3.4 million shares. Signal, classic penny stock profile with elevated execution risk. Be on the lookout for company disclosures and very wide bid-ask spreads at the open.
And BURU, up about 36% to 38 cents on roughly 355 million shares. That turnover screams speculative flows. If you've got access to options flow, check for abnormal activity and keep an eye on social channels for coordinated buying cues.
Quick pause for listeners. None of this is a recommendation. Analysts note trends and data. This is informational only.
Right. We're not telling anyone to buy or sell, just explaining what happened and why it matters from a market structure standpoint.
Let's connect a few dots. One pattern we saw, simultaneous extreme moves in both penny and small cap names, points to cross-market speculative behavior, amplified by platforms that make trading these stocks easy.
And when that speculative appetite aligns across several tickers, you can get volatility bleed. Implied volatility in single stock options can spike. Hedging flows kick in, and that can ripple into temporary index volatility.
Right, and crowd behavior can compress liquidity and trigger squeeze mechanics that affect brokers' margining and intraday funding. Risk desks often respond quickly after episodes like this.
So what will people be watching Monday? Follow-through volume tops the list. If volume stays heavy, continuation is more likely. If volume collapses, you could see sharp mean reversion.
Company disclosures and SEC filings are also critical. An 8K or press release that explains the move can either justify the price action or leave it looking like a detached momentum event.
Opening price action will matter too. Expect volatile opens and wide spreads, especially for the penny stocks. SKLZ might open more orderly, but still vulnerable.
Also watch options flow and implied volatility. Big spikes there can signal hedging demand or concentrated speculative positions.
Short reaction 3.
Got it.
Before we wrap, let's give listeners 3 clear takeaways from today's briefs.
Takeaway 1. These moves looked momentum-driven, not fundamentals-driven. So expect either follow-through or quick reversals.
Takeaway 2. Liquidity numbers can be deceiving. Big volume doesn't guarantee stability in penny and microcap names because of shallow order books and wide spreads.
Takeaway 3. Weekend timing increases gap risk. Watch filings, follow-through volume, and opening price action when markets reopened Monday, April 27th.
Final wrap. This is informational only. Analysts note these patterns and data. It's not personalized advice and not a recommendation to buy, sell, or hold any security.
If you want to dig deeper into any of these names or the data we referenced, head to stockalpha.ai. And if you have questions about anything we covered today, you can ask us directly through the Q&A feature and we'll answer live.
For more market analysis and insights, visit stockalpha.ai and send us your questions. Thanks for listening, and we'll see you on the next Alpha Recap.